Thank you so much for joining my channel, guys. I really appreciate it. And today I'm going to show you guys 3 stocks that I'm watching. And out of the 3, I'm buying 2 of them. So is it Tesla? Is it PHM? Or is it 3M? That's what we're going to discuss today. And I'm also going to show you guys the bullish factors and the risk factors for these stocks. And I'm going to share with you guys my buying price target for these stocks. And I'm a long-term investor, so I'm not going to buy these stocks just to play around for a few days or a few weeks or a few hours. This is for long-term investment. And I want to share you guys something very interesting. Everyone's talking about AI these days. So I want to show you guys what AI think about long-term investment into stock. All right, guys. So that's what we're going to discuss today. So stay tuned and don't forget to press like and subscribe my channel. And my name is Wayne. So first, I'll show you what's happening in the market today. It's a weekend, so I hope everyone's having a great weekend. The U.S. on Friday, the market didn't move much. Nasdaq went down by 0.22%, and S&P 500 went up by about 0.03%. Not much happening. And all right, let's have a look at what AI think about this long-term investment into stock. All right, so the question I asked was this is Chat GPT. So this is a question. So can you explain the importance of long-term investment into stocks? And the AI explained that long-term investment in stocks is a widely recognized and proven strategy for building wealth and achieving financial goals. Here are some key reasons why long-term investment in stock is important. So you can go look at it. There are a few on the list. So what's interesting is this one here. There's opportunity to invest in growth companies. So many successful companies experience substantial growth over the long term. So just have a look at it. It's very interesting. All right, so now let's look at my first stock. So the first one is this one here, PHM. It's a Pulte Group. I'm not sure if I pronounced it right. Anyway, this one is American company, and they build residential homes, and the company has built over 775,000 homes, and the market cap is 17.43 billion, and PE ratio at the moment is 6.66, so it's very low PE. If you look at this here, so they pay dividend as well, but it's very small, 0.82%. So let's look at the revenue growth. So if you look at this company, look at this one, 2021 and 2022, the revenue grew by about 16.53%, and the year before 2021 it was 26.19%. So they've been growing recently, about 8% the year before that, and the operating margin last 3 years it's been good. So it's about 19%, 15%, and 17%. So I want to show you guys on my spreadsheet. So if you look at it, the revenue versus earning, it's about 21%. This is from last year, and market cap versus earning is 19.62%. So this one here, its market cap is if you buy the whole company, you buy every single share of this company versus your earning. So market cap is that's how much you'll be paying, the 17.43 billion, and the earning from that amount of money that you pay is about 19.62%. So this is higher than the average, and the cost of goods sold is about 70.28%. So this is also quite good for the average, and I couldn't find any research and development. So I'm guessing they're not spending any money on research and development. From my calculation, my price target for PHM with 12% return on investment is, if you look at over here, it's $105.48. And at the moment, the share price for PHM is 78.03. So with this one here is with 2.5% growth. So why did I put in 2.5% growth? Because I'll show you this one here. So interest rate going to go up again by another 25%, most likely, because if you look at this, there's about 99% chance that 99.2% chance that the interest rate going to go up. So if you look at it here, you see 99.2%. So when interest rate goes up, most people expect that there'll be less people buying homes. So that's why this is a margin of safety that I put in for the revenue growth, just 2.5%. And also the revenue versus earning, the margin is at 18%. So it will come out to be priced in 5 years. So let's say 2.5% revenue growth every year for the next 5 years. And my calculation come up with $122.53 for the PHM stock price in 5 years' time. So when we bring it back to today's value, it's about $105.48. So that's about 35.18% upside. If we look at another target, which is with 15% return on investment, same with 2.5% revenue growth, with 18% earnings, and the estimated market cap in 5 years is about 21 billion. The market cap now is 17.43. Estimated revenue in 5 years is 18.25. So it just goes up by just a little bit. And with this 15% return on investment, my price target is at $84.39. So let's have a look at what the experts are saying about this PHM. This is on NASDAQ website. So if you look at it here, it's strong buy at the moment. And then the price target is 84.29. And if you look at this one here, so the average target is 84.29. High is $95 and low $68. So let's look at my price target. So my buy price is below $80. So now it's at $78.03. So we can buy from now up to, I'm willing to pay up to about $105. So there you go, this price. So next question is, when should we buy this stock? So for me, I'm gonna wait until the rate increase on, let's have a look when it is. So if you look at the date here, it's on the 26th. So I'm planning to buy in the next couple of days. And yep. So I'll be DCAing into this PHM stock. All right, let's look at the next one. The next stock is Tesla. All right, let's open up Tesla. So Tesla, if you look at it 5 day, the Tesla went down from 297 last a few days ago to now it's 260. So went down by about 13%. And Tesla has been growing. If you look at this one here, so from 2020 to 21, this is 70.67%, and 2022 is 51.35%. And Tesla margin, let's look at the margin here. The Tesla margin is 16.84%. It's over here. All right, so let's look at my spreadsheet again for Tesla. So as you can see, Tesla share price now is 260. Market cap is now 814 billion. And Tesla cost of goods sold is billion. So my calculation is cost of goods sold 74%. And see this, the revenue versus earning is 17.8%, and cost of goods sold 74.4%, and they spend on research and development is 3.77%. Here are my price target. So unfortunately, my price target for Tesla is $171.41 now, and it's now at 260. So I need to come down a fair bit to get my target. So this is calculating with 70% revenue growth. So if you look at Tesla currently, last year, in 2022, they grew by about 51%. So with this 70% is for the next 5 years. So this is, I'm assuming they're going to increase sales and they're going to be selling more cars. And so this was 70% growth. But if we look at 60% growth, and if we look at 60% growth and 70% margin, the target price will be at $117. So my target price now below 160 for Tesla. So it need to come down by about another $100. So what are the risk factor for Tesla? So let me show you this one here. So the main risk factor for Tesla is the competition. So if you look at it, look at this one here. So this is Tesla operating margin. So for the last earning, the margin went down to 15.17% from 17% last year. So I think that's why Tesla price dropped about 13%, because of the EV competition. A lot of car makers are start making EVs. So we'll just have to wait and see if they're going to improve their margin. So right, the next one I'm going to look at is 3M. So 3M is now at $104 at the share price. Market cap is 57.856 billion, and PE ratio 10.81. So if we look at 3M, this one here, so this is 3M. So let's look at the revenue growth. So 2019 to 20 revenue growth was 0.15%, and 2021 is 9.85, and 21 to 2022 is 3.18. So 3M is not really growing anymore. And let's look at 3M margin. Margin is 16.88. So let's look at the margin history, operating margin, this one here. So 3M, see the margin? So it's been quite high, the 20%, 18%, 21%, and 2021 was 20.84%, and 2022 it's 11.94%. So all right, let's look at my spreadsheet for 3M. And so if you look at 3M, revenue versus earning is 18.67%, and market cap versus earning is 11.1, which is more than 10%, which is on average. And the cost of goods sold is only 56.11%, which is quite low. And R&D for research and development for 3M last year was 5.41%. So if we look at this one here, for 12% ROI, return on investment, is my price target is at $111, and that's about 6.64% upside. This price target, I use revenue growth of 5% increase every year for the next 5 years. So I believe they can achieve this 5%, and the earning is 20%. So with the next one, I just use revenue growth of 1.5%, and this is for 15% return on investment. So this is with a bit more margin of safety. So with this with this 15% return on investment, my target price for 3M is $68.90. All right, let's look at what experts saying about 3M stock. So if you look on here, it's whole at the moment, and based on 16 analysis, see the price target is at $106.31. The low at $92 and high $159. So at the moment, 3M price is $104.39. So it's not too far from what the analysts are saying. All right, let's look at what my price target is. This one here. So my target is below 100, so which is not too far off, and I'll be buying up to $110. And with 3M, the risk factor for 3M is the growth. So as you can see before, see the risk is that if they don't grow and if it's negative growth. So that's a risk factor, but I believe they can achieve this 3 to 5% revenue growth in the next few years. So that's it, guys. So the two stocks that I'm buying are 3M and PHM. And if you have these stocks on your watch list, or if you are planning to buy, write some comment down below. All right, guys, I'm just showing you guys the stock that I'm gonna buy and the price that I'm buying it. So it doesn't mean that you just go out and buy these stocks. So it's very important that you do your own research buying these stocks or any stocks. So that's all for today, guys. Thank you so much for watching. And before you guys leave, don't forget to press like and subscribe my channel. And see you in the next video. Okay, bye-bye.